In this practical video, we're going to buy and sell stocks using MEXEM. We have several MEXEM accounts too in total, personal and business, and I also have 2 Dejaro accounts. My name is Jorik Vermeulen. Welcome to Happy Investors. We help people invest simply for financial freedom, and here we're going to talk about buying and selling stocks with MEXEM. Before we do that, first 2 ground rules. The first is that we've made a very comprehensive review about how MEXEM works exactly. We also do this for other brokers like Dejaro. Check that out for everything you want to know about portfolios, research, performance reports, all the way to taxes, requesting documents for the tax authorities, that kind of thing. The second is, first we're going to talk a bit about how to find the right stocks, because that's really a skill in itself. If you're not interested in that, that's fine. Just skip ahead to the part where we talk about buying and selling these stocks. So really quickly, let's talk about how you actually find great stocks to potentially achieve above average returns. Well, for that, we use paid tools. That's not suitable for everyone, but it's good to point that out. What you also find at MEXEM is that we have a number of tools there as well, specifically under fundamental data. We use this data too. But what we do, for example, is use a number of stock screeners that we have. These are paid screeners, several of them, and together they cost more than 10,000 euros per year. Also motley fools, but honestly, I think that's actually one of the least useful ones. And here you could also see other tools that we use, including technical analysis and things like that. And we combine all our knowledge. That costs more than 10,000 euros per year, and we actually bundle all of that into our dividend stocks and growth stocks, which are available for 99 euros per year as a membership. And I can assure you, we have good returns, demonstrably so even. You don't have to take my word for it, but check our website. You'll find more information there about our historical returns. 17% on dividend stocks, growth stocks. But those are particularly high at the moment, and that won't necessarily be the case in the future. This is since 2022, so we're still achieving above average returns. And in those videos, I explain how we do that. For that, you can also subscribe to our channel for more explanations about selecting stocks and things like that. There's no guarantee of success, and I'm sure you're a good investor yourself. So it's not about showing off, or however you want to call it, but it is a serious matter, because investing comes with the risk of losing money. And my assumption, if you're watching this video about how to buy and sell stocks, is that you're a beginner investor. Otherwise, as an advanced investor, you wouldn't be watching this video. So as a beginner investor, you need to know that even though all those positive returns look great, there are also stocks that can cause you to lose a lot, and I have several of those stocks myself. I always show that as well in my monthly updates of the stock and ETF portfolio on YouTube. There are plenty of losers among them too. One advantage with MEXEM is that if you go to fundamental data, you can look up stocks there. In this case, we've looked up the ticker bill from Bill Holdings. By the way, this isn't advice, it's just for inspiration to show you. You'll find some information here, and this is all completely free, and there are a few handy tools included. I don't use everything myself, but that's because I have other tools. But here you'll find ratios, dividends, financials, which are of course very important as well. And what I really like about MEXEM is the analyst ratings. 2 things. The first is, here you'll find definitive ratings. These are actually Wall Street analysts, so you can see below as well. Morgan Stanley, UBS, Wells Fargo. Apparently, they've all issued a price target for Bill Holdings, and their average price target is around 60. Well, the current price is 45, so that means a potential upside of 30%. However, the lowest estimates are at minus 12%, and the highest estimates are plus 95%. Well, that's just one of the tools. You also have tip ranks, which I personally don't use, and there's Morningstar, which I also find useful. But a little tip about Morningstar. This is available for free on MEXEM for you, and of course for me as well, which is very handy. We just need to make a distinction here in the type of analysis. You have the quantitative equity report, and we also have the analyst equity report. And if it's qualitative, then it's actually created and compiled by an algorithm. And this is much less reliable. If we take ASML as an example, then you have a combination of quantitative analysis and an analyst who has taken a good look at it. That doesn't mean it's decisive, because the analyst can be wrong. but you use multiple tools and data sources, including your own fundamental research, to determine whether you're actually heading in the right direction. Here we see Analyst Equity Report, so this is a different report. You can also see that this is much more detailed than what we saw with Bill Holdings. Well, that 4-star rating with a fair value of 960 compared to the current price of 800 doesn't tell the whole story. These analysts, for example, give a price estimate of around 840. Morningstar looks at the long term. These ones focus a bit more on the short term though, so there are a lot of ifs and buts. But in a nutshell, use different tools, and one of them is MEXEM, which offers free tools. That's a bonus and an advantage, so make use of it, and please don't rely solely on these sources, but let your thinking be inspired by multiple objective sources, always including your own research. Because you should always invest in companies you understand very well. That's crucial for your success. If you've done all that, that's awesome. Now we're going to buy and sell shares. We'll start with buying a share. You deposited money into your MEXEM account. At first, you won't really see anything yet. You can stick to your base currency, which is euros. Or if you want to buy in dollars, you can convert your currency to dollars. That way, you save on transaction or currency exchange fees if you let it happen automatically. So it's better to first put money into your USD account if you want to buy in dollars. A big advantage of MEXEM is that they actually have the largest selection of all brokers, and they have very low fees, especially for USD. So I personally invest a lot in America, which I like. I also invest in European stocks. It also depends a bit on the situation over the years. But if I buy USD, I do it through MEXEM, because it's by far cheaper than, for example, DeGiro. I invested with DeGiro for a long time. I'm very positive about it, although there are definitely some serious drawbacks as well. But MEXEM is simply better, especially if you're going to invest in dollars or euros. Then you can just stick with DeGiro. So here we see a number of tickers that we bought, and you can see the daily profit and loss and the unrealized profit and loss. Some are in the green, others are in the red. You can go to performance, and then you'll actually see an overview of your portfolio. You also see which sectors you're in and which industries you could be in, and you can go through all of that at your own pace. Let's say, for example, you want to buy ASML. A well-known example is always easy to talk about. So, we type the name or the ticker into the search bar. Usually, it works best if you type in the ticker. For ASML, this happens to be the same as the name, but for Bill Holdings, you see that the ticker is Bill. For BK Technologies, you see that the ticker is BKT, and searching by ticker works better. You could also just find the ticker if you search on mine for ASML shares or ASML stock. Then you'll see ASML, and you'll see it listed below. On the Amsterdam Stock Exchange, ASML is the ticker, but here you see it listed after the name, NASDAQ, and here you see it says A, B, and another term. Well, NASDAQ is simply the NASDAQ exchange. So here, because this is the American exchange, you use the dollar currency here. Let's take a look. We click on it, and indeed, we see the prices in dollars. This means that if you currently have euros in your account and you buy this stock, then it will be converted from euros to dollars. Well, then you'll have conversion costs. At MEXEM, fortunately, those are pretty cheap. I've also made an in-depth review comparing DeGiro and MEXEM, where I openly and honestly share everything you need to know, and I have no interest in promoting one over the other. For example, eToro, they pay ridiculously high fees to promote them, but I don't do that, because it's just a bad platform. That's really what it comes down to. DeGiro and MEXEM are both fairly cheap and also offer low fees. I can guarantee you that 100%. But here you see the dollar currency. And yes, this does mean conversion costs. It's not a huge amount, but costs are still costs. And very importantly, you also have currency risk, of course. So the exchange rate fluctuations between euros and dollars can have an impact over time, both positively and negatively. Let's keep it simple. You don't want to buy ASML in dollars. You want to buy it in euros. Well, I don't know what AKD stands for, but you can just look that up on the internet. For example, you could also look up AB on the internet and then search for exchange meaning or betakinis. because this is simply the stock exchange. I happen to know this is the Amsterdam Stock Exchange. It just has a different abbreviation, but it's on the Amsterdam Stock Exchange. So we click on it, and we can indeed see that the currency is now in euros. So this is an important point to pay attention to if you're buying shares for the very first time. Good to know. Now we're going to place a buy order, and we're going to place a sell order. We'll start by creating a buy order. Right here, you can already see a lot of information about the ask and bid. And here you can see over the longer term, 52 weeks, the highest price level was 1,000 and the lowest was 500. So that means a difference of 50% in just 1 year. Keep that in mind, you could lose your money. Investing also comes with risks of losing money. That's the downside of investing. And if you zoom out a bit on the chart, you can also see the price. In 2024 it was 1,000, and the price in April 2025 was indeed 500, so a drop of 50%. But I'm not going to explain every detail of how this works. I've also already shown what the fundamental data looks like, so here you'll find all kinds of information about ASML. You've apparently decided that you want to buy this company at your own risk, and I hope for the long term, because that saves a lot of trouble. If you're a beginner investor, you can significantly increase your chances of profit simply by buying for the long term. But you should always pay close attention to the price you pay. And price doesn't mean what's shown here, because that 680 euros basically means nothing at all. What that price here means is simply that you're buying a share for 680 euros. The only thing you need to look at is the cost per share in relation to the profit. So you get ratios like the price to earnings ratio, price to sales ratio. That's the price to revenue ratio. EPS, earnings per share, profit per share. That's a very important one, but the most important of all is the development of free cash flow. If you don't know these terms, then you really have some homework to do before you start with stocks. I don't mean to be annoying, but you could lose your money, so it's better to be well prepared, and no need to worry or stress. You can absolutely take your time to prepare, because investing isn't going anywhere, and there are always opportunities to buy better stocks in the vast universe of stocks like ASML. We're going to buy. You have A. You've done your research. You've decided, great stock. I'm buying for the long term, for whatever reason. Let's make two assumptions for a moment. The first is that we're buying at this price level, and the second assumption is that, according to our analysis, we expect it could rise to 1,000. This assumption is just as important for the benefit of, for example, okay, buying is actually very simple. I'll keep it as simple as possible. I'll try to explain it as simply as I can, so let's actually stick to two buying options. The first is a market order. If you place a market order, it simply means that you buy at the current market price, which is fluctuating at that moment. You need to know how much money you have, and in this case, for example, you have 1,000 euros. Well, in principle, you could buy fractional shares at MEXEM. So instead of buying one whole share, which for example at DeGiro and BUX, well, not BUX, but at eToro? No, not there either. At DeGiro you have to, and at Saxo Bank, and I think some other brokers, they don't offer fractional shares. Apologies if I'm misspeaking, and they actually do, but then you have to buy a whole share. With MEXEM and with other brokers, you can buy fractional shares. So you could buy, for example, 1.4 or 1.35 shares. Or, okay, right, but let's keep it simple for now. We're just going to buy one share. So we set it to shares. That means share, and we're buying one. And here you can see the estimated costs. You're buying with a market order, so transaction fees still apply. You can see the back end in performance reports and in trades. There you can also see your transaction history. Here, you're just buying with a market order, and if you set it to good till cancel, then it will basically always be activated. I'm deliberately using this example because I'm recording this video on a Saturday morning. Suppose I set it to day level, and I'm not sure if this day level applies on Saturday or if it automatically moves it to Monday. I'm not sure. Never tested it. Honestly, it doesn't matter. I'll set it to good till cancel. We press by order, and in any case, an ASML order will be bought as soon as the market opens. So that's Monday morning, the Amsterdam Stock Exchange. The limit order is more important. You've researched the stock. You've done a few things and you assume that, for example, even though the stock is currently listed at 680, it will drop again to, let's say, 560 euros. That's quite a price drop, but that's your conclusion. What you do now is, of course, you don't want to buy at 680 euros because then you're just throwing money away. No, you want to buy at the price of 580. So with your limit order, you indicate that you want to buy starting from this price level, in this case 580, as your limit price. Now, you should always set that limit price to good till cancel, because that simply means it remains valid until it is canceled. You can cancel it yourself, or it will automatically be canceled if the price never hits 580 again. Because ASML might be incredibly successful and never drop below that price of 580 euros again. So, a good till cancel by order, and basically now it just sits there. Then you still have to approve it, after which it gets activated and will appear under your orders. You can see that under trade, and then you'll see your orders listed. Yeah, you'll see that automatically. Super simple. You can also delete those open orders at any time. That also speaks for itself. Really very simple. Okay, so now you've created a limit order. There are also some other orders, like trial and stop limit for buying. Yeah, I don't use those myself. Well, I do use it as a stop order, but I only do that when selling. Let's take a look at that. Okay, let's stick with the example and the assumptions for now. We bought at 680 and we're going to sell at 1,000. Alright, here we go. We bought ASML, it's in our portfolio, and now we're going to sell. Just as an example. So, we bought at 680. You can do a couple of things. For whatever reason, you decided you want to get rid of your share immediately. Well, then you just sell using a market order. You had bought one share. You can also see that in your overview here. When you bought with a market order and you just place a good till cancel sell order, it actually gets sold in no time once the market is open. That's often just a split second. Alternatively, you might say, well, I bought ASML at this price, but I expect it to go up to 1,000, which could take a few months. It could also take a few years, but I just want to sell it at 1,000 euros. If that's what you want to do, that's totally fine. That's your choice. What you need to do now is you have one quantity, you set it as a limit order, and the limit price is the price at which you want to sell it. There you enter 1,000. Basically, what will happen then is that when the limit price of 1,000 is triggered, which could take a long time, but once it hits 1,000, then, in principle, it will be sold automatically by the system. So you can set up automatic sell orders. You can also set up automatic buy orders, like we saw in the previous example where we wanted to buy automatically at a lower price. Here, you want to sell automatically at a higher price. There's another variation of this, and sometimes I've actually made a mistake myself once. Back then, I actually wanted to set a stop loss, but I accidentally selected limit, and then I said, yeah, I'll set it up. So now I've bought it 680, and I'm going to. I'm just saying this purely as an example. I want to sell if it drops below 600, because that's something you might do to limit your losses. So if you say, yeah, there's a support level here, but it drops below it, then I actually don't want to have more loss than, say, 10 or 20%. That's how you basically cut your losers. Well, that's not really applicable to a great company like ASML for the long term. But you could do this, for example, with average companies where you think, well, they might go up. Only if I'm wrong and they go down, then I just want to get out right away. A mistake I once made, luckily a long time ago, is that instead of the stop loss limit order, I chose the order type limit, and in this example, just as a hypothetical, I typed in 600 as the limit. If you then place a sell order, yeah, it basically gets sold immediately, because you're indicating that you want to sell it now for 600, but the current price is 680. So another investor who now wants to buy at 680 with a market order will immediately be matched with your sell order, because your sell order is below the current price. So bam, you lose your share just like that. But don't worry, nothing will be sold at 600 euros. The system has some safeguards in place to protect you. You will probably get around 676 euros or 677 euros for your share, for example. But of course, that's not what you want, because then you'd have to buy again. So that's a mistake you want to avoid. Instead, you should place a stop loss order. So you can see where the confusion comes from. At DeGiro, it's called a stop loss and limit order, but here it's just called stop. What they're basically saying is, okay, if the price hits 600 euros, the system will act. So we've now bought at 680, and for whatever reason, in the coming months it drops below 600. If it hits that 600, it will automatically sell. Then you'll have a partial loss. But if it drops further, for example to 520, you won't lose more than where it stopped. Simple as that. Then you can do two things. Take your loss and look for another stock. Or if you believe in ASML, you simply buy again when the shares have dropped further and buy back at a lower price. So this is a strategy you can use. There's also a stop limit. With that, you can set both the stop price and a limit price. So here you set the stop price, and with a stop limit you can basically set a range. But I have to say, you don't use this very often. And what's even better for a stop loss order, and what I often use myself. And I think this is a tip that could make you a lot of money, at least from my experience. It often happens that you catch a winner. You buy 10 stocks, and one of them will perform extremely well. At some point this year, it's doing so well. For example, it's grown by 200% in just a few months. Well, that really must be overvalued. But sometimes the market stays irrational for a long time. To really understand this, you need to dive much deeper into investing. But just take my word for it, that's how it is. And it could very well be that the price keeps rising even further. So for example, we see here that ASML was at 1,000 in 2024. Instead of saying, I'll automatically sell it at 1,000 with a limit order, like we set up before, you can do something else. You can simply do nothing and wait until it hits that 1,000. And then, because you believe in this company for the long term, because you're investing for the long term, you just wait until it goes even higher than that 1,000. At that moment, you think it's overvalued. I should actually sell. You can indeed just sell at 1,000, and then you'll lock in your profit no matter what. But what you can also do, and what I think is better, is to let your winners run for the really long term. In that case, you simply set a stop price once it goes past 1,000. So now we're a few months down the line, and the chart has kept going, and it breaks through that 1,000 euro mark, and, for example, it's at 1,100 or 1,200. And now, in principle, we can secure our profit by setting a stop loss. So the price is 1,200, and at that moment, we set a stop loss at 1,000. We bought at 680, so we've already locked in the profit no matter what. Okay, but if the stock drops from 1,200 to 1,000, then it sells, and you still have your profit no matter what. But if it keeps rising from 1,200, then you make even more profit, and you can always sell later if you have more gains. So using a stop loss order to let your winners run is really useful. And this way, you could also use the stop loss to immediately cut your early losers. Because basically, you want to let your winners run as long as possible and sell your losers as quickly as you can. Personally, I use a different rule. After 12 months, I check whether the company has moved in the right direction, as I expected. Is the company indeed moving strongly in the right direction with good momentum? Then I often place a stop loss order, as we just discussed. If I see that after 12 months the investment case hasn't worked out, and I don't believe in the company's long-term potential, but I saw it as a small opportunity, a one-off chance, and for example, it's down by 50%, then I just sell. I don't look back, and instead I just buy another potential stock that could do the same. And in this way, you keep fluctuating, continuously holding onto the winners in your portfolio and simply eliminating the losers. There are many more tips for investing, which I share all on our YouTube channel Happy Investors, but also on our website. You'll find blogs here. You'll find a lot of information here. All of it is also for learning and entertainment. And you can also join us in win-win investing. In principle, we aim for a net return of 10%. That's high, and the only thing you have to do is invest passively by linking your software with our service. And for that, We basically only ask 99 euros for the annual software system costs. And besides that, we only charge a performance fee on the returns achieved. This is unique in the Netherlands. No one else does this. So that's really cool. But I don't want to push you. Just take a look for yourself at your own pace later if you're interested in passive investing and want to have it managed by us. We become stock investors and actually do this on a daily basis. So doing it yourself is of course also a lot of fun. That was the initial goal of this video, to help you understand how buying and selling works. At a certain point, you bought, you have a portfolio here, and yes, you can then buy or sell on your own. You can also buy more, add to your winners. It's a long-term game. A lot of developments, super fun to learn. Especially if you have an entrepreneurial mindset yourself. Thanks for watching. Hope you learned something from it. Do you have any questions? Comments? That's fine. Just ask them. This video is by no means comprehensive, but if things are clear or you have additions, they're very welcome. Let me know. Thanks for watching and see you next time.